It's the middle of the month, so it's time for the monthly market update. And Phoenix prices have done something unexpected. Stick around to find out what that is. Hi folks, and welcome back to the channel. It's the middle of the month. That's normally when I do the monthly market update because we have all the statistics for the prior month and we can see a little bit into what's happening in July. If you're interested in this kind of information, please like and subscribe so that you'll get these updates and more information about real estate. First place I always start is with mortgage rates because mortgage rates are what's driving what's going on in the market right now. High interest rates have led us to a very, very slow market in 2025, just like it was in 2024 and 2023. And I can show you where all the pain started. If we go back to March of 2022, interest rates were way low, and then in April they started to come up again. So we see we're pretty much in this range for the rest of the time. Really hasn't changed much. And we can see for this past month and a half, even though they've gone downwards and they hit the bottom in June and July, it was still 6.67%, which is pretty darn high. And since then, they've only climbed, making the market even more tight. And just for another perspective, this is for January 1st all the way till today. So even though we see a downward trend, we're still pretty high on interest rates. One thing we can look at, though, if you're a first-time home buyer, we can check out FHA, but for first-time home buyers, you're actually at 6.5% with Mortgage News Daily's rate, which means you're about 1/3% lower than everybody else. This doesn't mean you can't buy a home, though. There are a lot of motivated sellers out there that'll help you buy down this rate, and it can be part of the offer you make on a home. So keep that in mind. You can still buy these rates down through a lender and still find the home that you want at a reasonable monthly mortgage. Something else we want to talk about are home delinquency rates. You can see this headline from Phoenix Business Journal talks about home mortgage delinquencies rising nationwide, including Arizona. But when you actually look at the statistics, they've only gone up 0.12% over last year. That's not 12%. That's 0.12% in Arizona. But in other states, we can see that rising property taxes and insurance are leading to more delinquencies. Now, these rates of delinquencies at 1.43 for Florida, 1.11 for Texas, and 1.87 for Louisiana are not abnormally high. We've seen 3.25% being a standard in the past, but as property taxes and insurance go up, particularly in places like Florida, because of hurricanes, we're going to start to see maybe more delinquencies. FHA loans, we talked about first-time home buyers before, are pretty high at 3.09, but VA loans are the highest at 4.11 in Florida. So if you live in Florida, you can see the property taxes jump nearly 50% over 5 years. Even though they don't have a state income tax, property taxes have gone up. So that puts a little bit of pressure. And you can see this map shows the change in serious mortgage delinquencies. Now it's time to switch to the market movement in Phoenix, Arizona, mostly in Maricopa County. Now, if you look at ARM list, it includes places like Whitman and Wickenburg. I take those out because they're really not part of the metro area. And with this search, I can see I have 14,138 single-family homes that are up for sale right now. But when I take out Morristown, Wickenburg, and the others, we end up with 13,882. New listings are down 20%. We had 5,700 in May. Now we have 4,981 in June. Sold listings also down, but slightly, 7.5%. Sold listings. Under contract also down by about 8.5%, and active listings are down only by 5%. So we do see some softening in the market where sellers aren't coming out because they don't think they're going to get the price they want for their home. And we'll take a look at what the selling price was in just a little bit and what was so odd about the report this month regarding the prices in Phoenix. But just to take a look at new listings coming onto the market, their price per square foot is always a little higher. But even so, it's been dropping month over month. Median price is staying pretty steady. For the last 24 months, you can also find active listings and price per square foot dropping off on the average, though median has gone down just a little bit less. It hasn't dropped quite as much. But when we get to sold, that's where we're going to see the difference. So when we see an average price per square foot just about a little bit over $290 over the last 24 months for June. But when we look at the new listings coming on at well over $300 per square foot, then you can see that softening in the market taking place. By the time they're sold, that's going to record the actual sold price rather than what they were asking for. We also see median price per square foot almost hitting $260, whereas for new listings, it was almost $280. We move to month of supply and sold to list by price range. And I know there's a lot of numbers on here, but let me break it down for you. When you look at the top row, you're going to find homes that are 1 to 200,000, 200 to 3, 3 to 5, 5 to 7, 7 to 1 million, 1 to 3 million, and then over $3 million. So what does this chart tell us for June? Well, we know that in May and April, homes that were 100 to 200,000 were flying off the market. There was only half a month of supply in May and zero point 0.6 months of supply in April, which means they sold in 15 to 20 days. But now we see them lingering on the market just a little bit longer. And that may mean that these are distressed properties that need a lot of work and people aren't really looking for that, even at that price range. Uncertainty in the market may be driving some of that. The sale to list price we can see has also dropped in this area. So if these are distressed properties, maybe, then you can see that people are offering less than is being asked for the price of the property there. If we go back to December of 2024, we find that there was 1.25 months of supply in this range, and people were getting 111% of their asking price for these homes. But let's skip up into the 3 to 500 because that's really where we tend to be in the meat of the market. That's where a lot of homes are residing right now. And we see 2.5 months of supply on there, so it's not that bad. People were getting 98.7% of their asking price, which hasn't changed a whole lot over the previous months. We have 98.8, 98.8, 98.7, all the way down. So this is a pretty stable part of the market right here. If, on the other hand, we went to the $3 million homes, you can see these are sitting on the market for over 9 months, and they're getting 93% of what they're asking for June. In May, they were getting 96%. And we tend to see, and this will impact price per square foot generally when you look at the entire market, we tend to see these higher priced homes come off the market during the summer. And so if you see a big drop in July's report for price per square foot, more than likely it's because these high priced homes came off the market. Data for June 2025 on homes that have actually sold. So the first thing to read this chart, the blue-green bars are actually the number of listings that have sold. 6,511 homes have sold. We can see from April to May to June, these bars get smaller, which means fewer and fewer houses have sold over these preceding months. We also look at average price per square foot going down and the median price per square foot also going down during these 3 months. We can see the price per square foot, the average and the medians can continue to drop. From 12 months prior, we were at 279.5, then we went up to 281, 285, then we dropped to 278 per square foot average and 276 currently. So we see a downward decline again over the last 3 months. 12 months prior on the median price per square foot, we were at 261 per square foot. We dropped to 259, went back up to 262, but then we dropped even lower than 6 months prior at 255, and we're even lower now at 252 per square foot on the median price per square foot for a home in Phoenix, Arizona. We can also see this in new list prices. So new homes coming onto the market, what's happening? What are sellers thinking about? When we look back 12 months ago, we were at 471, and now we're down to 469. Doesn't seem like much of a drop, but if we follow the chart, we go from median list price of 471, dropped way down to 450, came back up 3 months ago for the spring selling season to 485. 1 month ago, it went to 479, dropped a little bit, and then there's $10,000 less median list for homes out there in the marketplace. So this is where the Phoenix market sort of surprised us. When we look at sales prices and we look at the median sales price, if you remember last month, they predicted that the median sale price for June would be 440. It ended up being 448. So if they were wrong on that, what is their prediction for the coming month? Well, for the coming month in July, they anticipate that the median price will be 439. And the numbers I've shown earlier have been corroborated by Homes.com that shows Phoenix has dropped very little in price. Here's a list of the top markets year over year and their price changes. So what's odd about this is we didn't see quite the softening that they anticipated we were going to see. Even though the market is softening, we clearly know that. Interest rates are still too high for people to get a home. Even though I have buyers out there getting homes right now, we just closed a deal on one 2 days ago where the seller is actually providing concessions and repairs that made it palatable for the buyers to come in and buy. So they're out there. It's just a matter of sticking your toe in the water to find out how warm it is, to see if you want to be a part of that as well. But generally overall in Phoenix, why do we think that might have happened? Why do we think that those home prices haven't declined as much as maybe people anticipated. One of them could be employment in Phoenix, Arizona. We have a lot of tech moving in here. Taiwan Semiconductor is building a second factory now north of the valley. We have other technology moving in here. I think some of them are fleeing California because of the high prices and other things in California. In fact, when we look at the unemployment claims for Arizona, we see the unemployment claims are down nearly 10% in 2025. They say they're on the rise as of late, but they're still down 10%. Something else to consider, we have some of the fastest growing cities here in Arizona, and particularly in the West Valley. Now, I'm sorry for the graphic. This is from Phoenix Business Journal, and even when I expand this, I really can't see that well. Surprise, Arizona, where we have Verado and some other really nice areas to live, we've seen a 16.5% growth in that city. Goodyear up 20.8%. I'm going to do a video on Goodyear's new town square, which is really fantastic. And then Buckeye, almost 22% growth. Tullison, that's a T up there, which is just the southern part of Phoenix in the West Valley, between Phoenix and Avondale, really. A lot of new homes going into that area right there. So we have almost 29% growth in Tullison. And the city of Maricopa, not the county, but the city, which is south of Phoenix, 30% growth. Again, a lot of new homes going in there, and they're less expensive than they are in downtown Phoenix or in even the surrounding areas. Queen Creek, another 37%, and Coolidge, 46% growth, which is right about here. But overall, when we look at supply in general, not just those particular cities that are growing, we can see the seasonal activity here with high inventory. Now, this was pegged out pretty much last month, and you can see it going upwards for 2023, 2024, and 2025. A lot of listings on the marketplace. Yeah, actually even more than we had during the pandemic. We now have many more listings out there. But they're not selling. That's why they're still listings. They're on the market because demand is low. And we look at 2023, 2024, and 2025, the demand in 2025 is a little bit higher this June than it was last June, which is good overall for the market, but it still shows low sales. Overall, that puts us in a strong buyer's market, and we can see, again, months of supply versus absorption rate. Months of supply really high, absorption rate really low. So for this market update covering June 2025's data, we'll get July's here at the beginning of August, and we'll see what happens. We'll find out if the prediction they have for $439,000 as the median price in Phoenix is true, or if they missed the mark on that one again. But what I see in the market is I see more realistic sellers going out there and listing their homes at a price that they're still making money, but they're not asking for those 2021 and 2022 dollars anymore. They realize that buyers just aren't going to pay that with a 6.8% conventional mortgage rate or even a 6.5% FHA loan. One place this tends to not make as much difference are in the higher ends where you have $1 million properties. Many of those go for cash. Also in the retirement communities, Sun City, Sun City West, a lot of those go for cash where people sell up north to move south. They have a pocket full of money. They can put it down on the home that they want and pay cash. I do a lot of cash deals out there in the Sun Cities. So if you're looking for a place to retire, that could be the place. But if you're looking for a home, a single family residence, a detached home in the area, don't get too frustrated by that, because prices are showing they're coming down, and sellers are motivated to help you buy down the interest rate anyway to get you into that more comfortable loan. It's just a matter of going out and looking. The first thing you have to do, though, is find a lender, get pre-qualified to find out what your range is, and then from there, we can look at homes and make an offer where we can get that interest rate down so that you're a little bit more comfortable buying in the Phoenix area. And of course, if you have any questions, leave me a comment, give me a call. My number's on the screen. Right at the end, you'll see it. Send me an email. We'll talk about what's going on in the market, and I'll buy you a cup of coffee. Talk to you next time. It's the middle of the month, so it's time for the monthly month. Blah, blah, blah. And Phoenix prices have done something unexpected. Stick around to find out about it. Stick around to find out more. Stick around to find out what that is.